Developing a winning Forex trading plan. Introduction. A winning Forex trading plan is a blueprint that guides traders in their decision-making process, helping them navigate the complexities of the market and achieve consistent profitability. In this text, we will delve into the process of developing a robust trading plan that encompasses key elements such as goal setting, market analysis, risk management, and trade execution. By following a well-defined trading plan, traders can enhance their chances of success and maintain discipline in their trading activities. Defining trading goals and objectives. To develop a winning trading plan, it is essential to define clear and realistic trading goals and objectives. These goals should align with your personal aspirations, risk tolerance, and trading style. Consider factors such as financial targets, desired timeframes, and the overall approach to trading. Market analysis and strategy development. Conducting thorough market analysis is a crucial step in developing a trading plan. This involves utilizing both fundamental and technical analysis to gain insights into the Forex market. Identify preferred trading strategies and methodologies based on your analysis. Document specific entry and exit rules, including trade setups and triggers. Risk management strategies. Implementing effective risk management strategies is essential for preserving capital and minimizing losses. Determine appropriate position sizing techniques and define the maximum amount of risk you are willing to take per trade. Incorporate stop-loss and take-profit levels based on risk-reward ratios. Regularly assess and adjust your risk management strategies as market conditions evolve. Trading psychology and emotional management. Addressing the psychological aspects of trading is crucial for developing a winning trading plan. Recognize and manage emotions such as fear, greed, and impatience. Incorporate techniques such as journaling, self-reflection, and mindfulness practices to maintain discipline and control emotions during trading. Stay focused on the long-term goals of your trading plan. Trade execution and management. Define guidelines for trade execution and management in your trading plan. Establish specific criteria for entering and exiting trades, including technical indicators, chart patterns, or fundamental triggers. Consider trade management techniques such as trailing stops or scaling in and out of positions. Determine when adjustments or early exits may be necessary due to changing market conditions. Review and evaluation. Regularly reviewing and evaluating your trading plan is crucial for continuous improvement. Analyze trade data, review trading decisions, and identify strengths and weaknesses in your trading approach. Use feedback loops to make necessary adjustments and refine your trading plan. Incorporate a routine for ongoing education and staying updated with market developments. Adaptability and flexibility. Acknowledge that the Forex market is dynamic and ever-changing. Incorporate adaptability and flexibility into your trading plan. Consider developing contingency plans and alternative strategies for different market scenarios. Stay informed about economic events, news releases, and geopolitical developments that may impact the market. Adjust your trading plan accordingly when necessary. Conclusion. Developing a winning Forex trading plan is vital for achieving long-term success in the market. By defining clear goals, conducting thorough market analysis, implementing effective risk management strategies, addressing trading psychology, and defining trade execution guidelines, traders can enhance their trading performance and profitability. Regular review and evaluation of the trading plan, along with adaptability and flexibility, ensure its relevance and effectiveness in different market conditions. With a well-defined and consistently followed trading plan, traders can navigate the Forex market with confidence and increase their chances of achieving their financial goals.